All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. I am simulcasting here on YouTube and on TradingView. Hold on. Let me just move this over here real quick. Okay, so you guys should be able to see my charts. So again, welcome and thank you for joining me. So let me explain to you really quick what we're going to do here. I'm trying to provide more of instructional type of videos rather than just looking at a chart and then answering questions the whole time. I do want to provide more value in these videos. So if you like the stream and you like what I'm offering here, please press the like button, press the subscribe button. It helps. I'm trying to build my brand across these social channels, and I appreciate that a lot. So again, thank you for that. So let me really quick explain how this stream works if you are new. So first thing I'm going to do is, as you know, my followers know, I'm going to go over the economic calendar. All right, something you should do every Monday. We're going to talk about that very briefly. Then we're going to talk a little bit about the trade scanner situation, because I shared a trade with you guys a week ago, and I want to analyze that a little bit and talk about what could have been done with that. And that's going to tie into the ATR. And then we're also going to take a look at Bitcoin, and we're going to talk about some, potential analysis here and stuff like that. As you'll notice on my chart here, he has an oscillator on the chart. That's not an oscillator. That's the average true range. Okay. And that's really going to be the center of today's topic. That's going to be the main thing that we talk about and how to use that in a routine way. All right. So also, if you would like to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right, so with all that being said, let's get this thing started, shall we? Let me just pull up my special slide over here. Okay, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let's move along real quick. All right, and by the way, all right, I have my TradingView up. So you guys, people that are watching me on TradingView, if you can't see me and you can only hear me, please refresh the browser. That usually solves the problem there. Okay, now would be a good time to put questions in the channel, by the way. The third portion of this whole thing is where I do my Q&A, and I answer questions about your charts and things like that. So if you have a question about a stock or an altcoin or something, now would be a good time to put it in the channel. Also, if it's an altcoin, please make sure to put USD or USDT after it so that I can get the correct symbol. All right, so let's get started. So before I get into the economic calendar, right, that's the first thing we're gonna get into here real quick. You guys should be well versed on this. You guys should be prepared, right, for my questions on that. But before I get into that, I would like to thank the TradingView team again for recognizing me as a wizard. Okay, I don't know if you guys saw that. Now hold on a second. I want to try to use my new magical powers here. Let me give me a second here while I do this. Okay, hold on. I want to see if this works. Okay, because now that I'm a wizard, this should work. Okay, so here we go. Bitcoin. Okay, here's my wizard forecast. Okay, my forecast using my newly acquired wizard powers. Bitcoin is going to go to 30K in the next 2 minutes. It's not working. Well, Bitcoin's at 27,345. Okay, hold on. I'm trying to get it to go to 30K in the next 5 minutes. This wizard thing isn't working, man. I'm gonna have to tell Stefan I need maybe he needs to send me a hat or something. I don't know. I can't get it to 30K. It's just not doing anything. All right, hold on. Let me make an adjustment. All right, Bitcoin, I forecast that Bitcoin will be going to 27,345 in the next 2 seconds. Oh, it's going the wrong way. Okay, hold on. 330, 338 in the next 30 seconds. Okay, it's there. Okay, look, 341 in the next 2 seconds. It's there. See, it works. Now you guys know how I feel when I watch fake gurus. Okay, now you guys know how I feel. Okay, anyway, because that's ridiculous, right? Anyway, but I'm recognized as a wizard, and I want to ask you guys real quick. By the way, Alex is the one that kind of inspired me for this idea. I don't know if he's here, but he kind of inspired me for this idea. But let me ask you guys real quick. are you familiar with this new wizard title? Do you know why TradingView put this together? I mean, do you have any idea? I just want to see if you guys are aware of this and why they made this title, this wizard title, because it was actually an idea that I was talking to them about at this party that they invited me to, and I was harassing Stefan about it the whole time. And he told me they sort of considered my idea, but they were sort of working on something anyway. Okay, whatever. They don't want to say it was my idea. No problem. But do you have any idea why they came up with this? Any idea why they came up with this wizard? I just want to see what you guys have to say about that. Anything? Man, there's no one watching me on TradingView. Stefan tells me, you're like our top streamer on TradingView. Really? Man, you could have fooled me. Any idea why they came up with this? I'm not going to spend a lot of time on this, but I just want to see if you guys are paying attention to like what they're doing, because it's a very unusual thing, and we have to applaud TradingView for coming up with something like this. Any idea why they came up? You could say I don't know. If you want to say I don't know, you can say that. Any idea? Kai, yeah. Now, Kai, like I said, now you know why. Now you know how I feel about the fake gurus. Okay. Any idea? Hey guys, good to see you. All right. Okay, no idea. So think about this. When I went to this party and I was harassing Stefan, my idea was, I said to him, look, you guys need to have like a badge, right? Sort of like Twitter Blue. And the idea behind that is to separate market professionals. When I say market professional, I'm talking about someone who works in the industry, someone with a financial license, someone with a financial title of some kind that can prove that they're an actual industry professional, to separate them from someone who's not. And the purpose of that is to help users, especially new users, better be able to tell or better be able to judge the content that they are consuming. So you can say, oh, a professional, this is coming from a professional, rather than some TikToker in the basement of his parents' house. Okay. So that was the purpose, because the fake guru problem is so bad, the frauds are so bad. I said, you guys should have like a badge that we obviously would have to prove. Like if I have a Series 7 or a Series 3, I have to be able to prove that so that you guys know I'm a professional, right? So the content that the users are getting is professional grade content. Well, they came up with the wizard badge, which is basically the same idea, but they're choosing who they like to believe provides high value content. That's the whole purpose of the thing. So it's a very nice move on their part. It's an effort because they know, and I've complained about this numerous times, they know that there are people on the platform that game the system. And you'll have a guy with 100,000 followers, but his content is absolute garbage. So why does he have 100,000 followers? Meanwhile, someone like me or some of the other guys that are wizards, we provide actual valuable content to help you guys make better decisions or to protect yourself, and no one knows who we are. Like no one follows us. We get absolutely no attention. So TradingView is trying to help the users say, hey, look, we do have some very high quality content creation here. And you guys, at least if someone has a wizard status, you know that you're getting high quality. Okay, that's the whole point. Anyway, I want to explain that because that was a very nice move by TradingView. I never thought they would actually do something like that, but very nice move on their part. Anyway, so, and I was the fifth one. There's only 5 of us, okay? There's only 5 of us. They wrote a blog. Stefan wrote like a blog article. If you check their blog, it shows all 5 and says a little bit about them. And there are only 5 wizards. They're only going to pick 5 each year, I guess, or something like that. And then they have their Pine Script wizards, which are separate. But we're like the chart wizards or whatever. Okay, so I just think it was a nice move by their part. You guys should be aware of that. Okay, they just started this thing, and so you guys at least know on TradingView you're getting content from someone that they view as a high quality content producer. You're not going to get some nonsense like Bitcoin is going to 30K in the next 5 minutes, like I was just trying to demonstrate 5 minutes ago with my wizard powers. Okay, anyway, all right, so I just wanted to run that by you guys real quick. All right, now let's get into the economic calendar, right, before we start getting into all the heavy stuff here and and the ATR. So guys, with the economic calendar, you should check it every week. TradingView has its own economic calendar. You can use any economic calendar. It doesn't matter. We're looking for important economic events that are scheduled, and there's only a few each month to really look for. What do we have this week? We're in week 4 of April. What do we have this week? Anyone want to tell me? Anyone want to chime in? Let's see if anyone says anything here. Hey, so let me go back and let me see who we have. Glenn, good to see you. We got Raman, good to see you. my regulars, how are you? All right, James, no problem. Alice, good to see you. All right, cool. Oh yeah, Alice, I know, I'll get back to you. It's been really hectic these few days. I definitely will. I know you left me something, and I will check that. Thank you. Thank you for helping me out. Alice is helping me out with the trade history on the scanner. Very, very helpful and very interesting too. Hey, 1804 Daniel from Nigeria. Okay, cool. Good to see you. All right, Kai, my regulars, Alp from London. Hey dear, we have a Londoner. Hey dear. I had a guy in my student meeting. By the way, we have to have a student meeting this week. I had a guy, the first thing he asked me, he says, can you do your British accent? And I told him I was going to do the entire student meeting in my British accent, but I was only doing the British accent for like 5 minutes. Okay. Anyway, hey dear, that's my British accent. I know it's not very accurate, so don't give me a hard time about that. All right. So anything about the economic calendar? Okay, I don't see anyone putting anything about it. Okay, wait, hold on. TradingView. We have a guy. Durable goods orders. Yes. Okay, Hamid. Good answer. Okay, let me just see. All right, let me just see. Anyone else put anything? That wizard thing. I got your note and I sent you an email. Oh yeah, Malad. Yeah, sure. Yeah, cool. I saw your email. I'm gonna respond to your email. Okay, but cool. I told you I wasn't forgetting about you. All right. So yeah. So there are only a couple of items this week worth talking about. Durable goods was one of them. All right, that's Wednesday. What, Wednesday the 26th? Yeah, 26th. So that's durable goods. Durable goods for the U.S. It's not a big number, but it's something to pay attention to if you're involved in intraday trades. Okay, so be aware of it, but it's not like a big mover. All right. Thursday, the 27th, we have what? GDP. I believe U.S. GDP, which again is not a major mover. Okay, it's not an FOMC, it's not a non-farm payroll. It's but it's there. So just keep an eye on that. But I wouldn't be too worried about it. Okay, I wouldn't be adjusting positions over that. And then we have Bank of Japan interest rate announcement on Thursday as well, the 27th. Okay, those are the only items worth talking about this week. There's really nothing else this week. We have no CPI. There's no PPI. There's no, like I said, there's nothing else worth talking about. So it means it's a quiet week in terms of economic reports. Now, there may be some quarterly reports from stocks. I haven't been checking the stock calendar, but that's going to affect the particular stock usually. It's not going to affect the bonds. It's not going to affect, the dollar. It's not going to affect those things. We're only interested in things that affect these major markets like the bonds, the dollar, Bitcoin, gold, euro, those kind of things. All right. So that's the economic calendar. Now, let's move on to the next thing here before I make my chart bigger. And before we start talking about the ATR, which Kai knows, it's not an oscillator, but it can be used in a routine way. And like I said, Alex from Romania, actually, he made some comments a week ago, and that's really what got me thinking about it. And I'm like, you know what, we can use this as a tool to come up with a routine process for deriving orders, right? And order placement is a top thing. People don't realize how important order placement is. And it's not hard to learn, but you should have a process for order placement. Now, this is strategy aside. We're not talking about strategy. And there's no advantage to being good at order placement, right? There's no inefficiency that you're exploiting. But if you don't know order placement or you don't have a routine for it, you're just behind, man. I mean, you don't even think about competing in any kind of real way if you don't even know like what a buy stop is, for example. That's very basic stuff. You should all be familiar with it, and you should all be intimately familiar with the platform you're using, because each platform sort of has its own variations at times, right? Like some of these exchanges are not exactly the same as the way MetaTrader works, for example. Okay, or if you're using interactive brokers, there are more complex order types on there. So you really need to understand your order types and have a routine. The ATR can help us in that area, and that's what we're going to talk about. Now, before I get into the ATR specifically, I want to touch on the trade scanner. Now, I called the trade. I mentioned a trade here in the previous stream. It was Ethereum. Okay. Now let's go to Ethereum real quick. I called this trade here, right? You guys, many of you guys were here. I called this trade a week ago, right? In fact, Raman took the trade. Let's see. Is this the Coinbase one? Is that the one I want to show? No, it's the one. Let me see here. That's the one. Okay. So Raman actually took this trade. I want to talk about this trade. So it called Ethereum, right, long, and it also called Bitcoin long. but it called Ethereum long. It was like the Sunday before or something like that, right? Now, this is the trade scanner. In case you guys don't know what the trade scanner is, it's my members have access to this thing. It's their channels on my Discord server, and they produce text notifications as to when to get into a market, whether it's long or short. It's a text notification. Now, it tells you when to get in, but it does not tell you when to get out. And the trade scanner can't account for certain things. It can't account for news. It cannot account for context. So that component is something that you have to take part in. You do have to use some judgment, right? Now, I have two channels. I have one for coins and I have one for stocks. The stock one has been going nuts as far as it's been calling these long lists of shorts. You don't take all 15 shorts if it calls 15 stocks short. You go through them, you do some homework, and you pick one. Okay. Now you have basically a whole day because it calls them like today at 4:15 or 4:30 or whenever. That's when it produces the next batch, and that's when you have all day. You have 16 hours to come up with an idea or be prepared for tomorrow, right? So anyway, let's talk about Ethereum. So it called Ethereum. Now, Raman, do you want to remind me of the price? I believe it was like 2084 or something like that. And I want to highlight that on here. And by the way, let me make the chart bigger so you guys can see what's going on. Okay, hold on. Let me put this over here. There we go. All right. So I know Raman took the trade. So and Raman got stopped out and got back in from what Raman told me. And that's what you have to do with these things. So let me find that price. Okay, where was that price? And actually, to find it, we have to go to a 4-hour chart because that's the time frame that this thing is generally working on. Like you can use basically a 1 hour or a 4-hour time frame. So I would suggest to keep things simple, work with the 4-hour time frame. All right. So it was right around 2083. Thank you. That's the trade. Okay, that's the trade. So that's around here somewhere. In fact, I think it's this candle right here, right? It's right around here because it was on the 17th. So let's see, it's probably this one. All right, so this is where it called it long. Now let's zoom in on this. This is where my scanner called Ethereum long, right there, okay? This candle, you guys see that? That's where it called it long. Now, let's talk about this because now Raman mentioned to me, when I asked guys on Tuesday, I came into the chat and I said, hey guys, anyone take any of these trades? Because at that point, the market was doing this, okay? And I came into the chat. Hold on, my mouse is giving me a hard time here. When I came into the chat, right, I came in there to warn people, all right? And these guys can confirm it. I came in there to warn people that, this trade, and Alex mentioned this too. Alex doesn't even get the trade scanner. And he said, well, why would the trade scanner call this thing long at such a bad level or such a unattractive level? And it's because the trade scanner can't see, it can't account for context. It's looking for certain changes in the price action based on certain things, and it can't see everything. So it's going to make more aggressive calls, right? I would never call along, around these levels. Okay, hold on. This thing's giving me a hard time. All right. So I would never call around this level. This general area was a resistance area, which we can also see on Bitcoin. But as you can see, the trade was worth something, right? And this is what I want to talk about. So Raman had mentioned, we talked about the stop here in the channel together. We talked about it a week ago. And I talked about using like a swing low, like something like this, right? Using a swing low. And I think we agreed the stop was going to be set at, and is this thing, there we go. We agreed that the stop was going to be placed at like 2040 or something like that. And if you look at this candle here, right, the low is 2054. I forget where we agreed to place the stop, but it was something like that. And if Raman got stopped out, then we have to fairly say that the thing got stopped out, but barely. Okay. And next thing you know, it was worth what? 21.25 is the high. Okay. So here's the thing. If we used something like the ATR to determine our orders in advance, it may have been possible to capture this without much effort on your part. And that's the whole point. Okay. So at the time, I'm not going to, before I start explaining the ATR, right, let's just take a look at what it says here. So at the time of the trade, it was 30 points. Okay. That's what this thing says right here. This number right here. When I roll over that candle at the time, it says 30, which means I can use that number now to determine risk. Okay. And once I have my risk defined, I can actually extrapolate or project the reward, right? It's what everyone is into. So now the entry was 2082. I think we agreed it was 2083. Now, as you can see, on a time frame like this, smaller time frames using the ATR by itself, 30 is too small, right? So you have to multiply it. And we'll talk about that. So if you multiplied it by 2, that would be 60 points, okay? Has this thing gone 60 points against the trade after you took it at this point, right? So what was the low there? 2057. If you got long at 2083, which was a fair price at the time, what's 60 points lower? What is that, 2020 or something like that, right? Have we ever gone to 2020 after the entry candle, right? This is the entry candle. Let me erase this over here. Okay, let me erase that. The entry candle is this blue box right here. Let me make that bigger so you guys can see, right? So there's no confusion. And I'm going to get to your questions, guys. Let me just go through this lesson real quick. So we never went to that stop, and instead we went to, like I said, a high of 21.25. Now, if we take that same ATR, let's see, 60, and we multiply that by 3, that's 180, right? Was I able to make 180 points? Let's see, 2082. So 180 would be, let's see, 2182. So no, this thing never made it, right? This thing never went 2 ATRs. It never went ATR, I'm sorry, times 3. It never went there. Okay, so in a situation like this, what do? Well, at least, if anything, you could have put your stop at break even if you were not watching. Now, we're talking about in terms of ATR right here, all right? We're not talking about using levels or judgment to determine your exits, which you could have done, which I always recommend that, right? When you compare something, picking actual levels to using a formula to generate levels, picking the actual levels will probably give you a better outcome because you're picking them based on previous behavior, right? The ATR doesn't see that. The ATR is looking at an average range. And when you're looking at actual reactive levels, like historical resistance, for example, you should have a better idea that that's probably a good place to take something off the table, if anything, okay? But there's no way to know if it's going to turn right there. You know, you may have put a limit order at this price, 21.20 or 21.30 or 21.50. It may never have gone there, and then it turns red on you. So what do? Like, do you stay in this trade? You should be, at that point, you should at least be making adjustments, okay? When you get a big red candle like this, something like this, you should be doing something, right? Perhaps putting your stop to break even, adjusting your stop. And what's the low of this candle? 20.89. I mean, basically, you're a break even by the time this thing closes, right? So that's probably a good idea to do something, right? Maybe tighten the stop or just get out or whatever, right? That's what you have to do. The trade scanner, the trades that the trade scanner calls are only good for like a day or 2 or 3. I had people in the channel telling me, "Well, I'm going to put my take profit at, 31K on Bitcoin and blah, blah, blah." I'm like, man, you're being a little aggressive. Okay. So is that clear to you guys? Like, the trade scanner called a profitable trade, but if it was not managed properly, then it would have turned into a loss, because look at this candle. Okay. This candle clearly stopped it out if you stayed in the trade, but there was some profit. So when you have trades like that, you can't count on, it went up to 21.25, right? It was worth about 50 points. You can't say, "Oh, I would have locked in those 50 points," because chances are you would not have gotten it out up here unless you had an order sitting there in advance. And even looking in terms of ATR, it only went basically 1 ATR, like less than. It never even went 2 or 1.5. So most likely this trade never would have been exited around this area, whether you use that or if you happen to, use one of these physical levels here, right? You may have not gotten out of that. So you have to be prepared for when the market goes the wrong way. And the best thing to do is break even in those situations. I want you guys to be familiar with that, because if you don't get out, you're facing this. I mean, this thing got hammered. Okay. I mean, and we can also look at the Bitcoin situation. This all has to do with Bitcoin, but let's go back to the daily chart. Okay. So does that make sense to you guys? Man, I don't know why my mouse is giving me a hard time today. All right. Let me just fix this thing over here. Okay. So Anyway, are you guys clear on that? So I'm just trying to provide some clarity. That basically, when looking at the daily chart, okay, that trade was called up here, and clearly that's not a good place to be going long for swing trades, right? So knowing that part, you should know that the trade has a lower expectation to begin with. Does that part make sense? You have to know how to use the trade scanner to your advantage. You don't just assume, oh, it called a trade, it must be a good trade. It's not 100% thing, okay? I'm not one of these frauds telling you that I have a 90% win rate thing, because it's not. The win rate is going to vary, and it's going to depend on the environment. But if anything, you need to know support and resistance levels, and you should be judging those levels on a larger time frame, whether it's 4-hour or daily, right? And if it calls a trade up here, you should know that chances are it's not likely to go really far, right? So you should know before you even get in that you're taking a riskier trade. Does that make sense? Okay, does that make sense? That's a very important part of the trade scanner. People that have access to that, I want to make sure you guys are familiar with that, okay? Because today we're going to talk about using the ATR to help you make these judgments. All right, so now let me go back. I erased my ATR. Let me go back and get it back on the screen here. Okay, hold on here. And let me get that thing back on the screen. Hold on. Where? Just give me a second here. I just got to back this thing up. Okay, hold on. I'll have it up because the next thing I want to talk about here is we talk about the Bitcoin analysis itself. Okay, let's go back into that ATR. Where's my ATR? Hold on. How come? Oh, maybe I pressed. Oh, here it is. Oh, okay. Anyway, sorry guys. So you guys clear on that? Now, let's talk about this Bitcoin situation very quickly, and then I want to talk about the ATR. All right, and how to use that for trades. By the way, you guys who have access to the channel, tell me the most recent. I know it called Bitcoin like around 28,000 or something like that on Saturday, right? It called a trade like that. You guys want to put that in the channel, or if there's a more recent trade, you want to put that in the channel here, Ramen, maybe you want to put that in the channel, because what I want to do is I want to put together a trade idea again, because that Ethereum, we'll consider it stopped out, right? But my point with that break-even thing was breaking even is more valuable or better than taking a stop. If you have 10 break-even, if you have 9 break-even trades in a row, right? But you have trade number 10 is green, you're ahead. So if your trade starts out green, you should be making every effort to protect that and prevent it from turning into a loss, which can easily happen, especially in momentum-based trades. All right, so now let's talk about Bitcoin and what I drew here on this chart. This, by the way, I wrote an article about this on TradingView yesterday. Hopefully you've all read it. And I drew the rectangle here, this square, right? I drew this square like a week or two ago. And that square was the pullback, the ideal pullback area. My original drawing, right? Basically, I had this line like up there, right? Drawing that up there, which the market chose not to follow. I drew that line because that was a scenario that was possible, one out of infinite scenarios, but the market chose otherwise, right? I originally had a line drawn over here too, like this, right? I had this line over here like this, and it followed that part, but I don't expect the market to follow my lines. I draw these lines to illustrate what I'm thinking, okay? So the market chose not to continue to 33K. The market chose to turn, right, and sold off. Now, it doesn't matter why. Everyone always grasps for why. It doesn't matter why. All that matters is we are now in an opportune level. That's all that matters. Now, the scanner is not going to call this long because the scanner is looking at this right now. And the scanner is like, because I was looking at my scanner chart and the scanner is like, I don't know about this, right? The trend may be turning. So the scanner is programmed to, if there are certain changes, it's not going to keep calling longs, right? The trend needs to reassert itself Because if the trend changes on the short term and becomes bearish, it's not going to keep calling longs. It's going to start looking for shorts, okay? But and that process may be occurring right now on the scanner. That's one great thing about the scanner is it can keep you out of a lot of trouble. It can keep you out of bad trades because it's got a very particular way of looking at things, right? So now, but now using my judgment, I've determined that there is a general area right here, okay? And it has something to do with this consolidation back here. And I want to see what was going on right here with this current price action. So we have a support level. The general broader trend at this point, we can argue the general broader trend is still bullish, right? We have higher highs, we have a higher low right here, which is still intact, as you can see on the chart. So if the market wants to stay that way and maintain that structure, it's okay for me to still anticipate longs on the swing trade time frame. So that's my mindset. But before, I can't just step in. I can't just jump in just because we're in my buy zone, right? You don't just jump in because markets are random. Markets are highly random. And it's the first thing I always think of. It's the thing I respect the most because you have to respect that about the market. Markets are not, you cannot forecast the market with any degree of accuracy, especially over longer periods. Anyone that tells you otherwise is a fraud, okay? So knowing that markets are mostly random or highly random, I respect the market and I say, okay, the market is in an area where I'm interested in a long. This is a high probability location. We are in a support area within a broader bullish trend. This is likely where buy orders are around, right? There's probably more buy orders in this area. It's safe to assume that. But the thing is, I don't want to step in front of this thing if it's going to break, because it can break. There's always a possibility it can break. We're playing with probabilities here, okay? So if there's a probability it can do something, there's also a probability that it may not do something, or it can do something else, right? So we're trying to get like a basic estimate or a basic idea of, you know, what is more likely to happen. But I can't give you a hard number. I can't give you, well, 85% accuracy. I can't give you that, right? So here's the thing. I'm looking here. We're at a level, right? It's the criteria is lining up. We're at a level, but the level is not enough. I know the trend is generally bullish right now. It can change, but as long as the trend and the levels stay intact, I have an idea to work on. Now, what I need to see is confirmation. And as my students know, that comes in a few forms, but part of it is pattern recognition. And we have a potential little pattern developing here, which looks like a little mini double bottom, okay? I'm not even talking about the ATR yet, but which has nothing to do with strategy. But this little area is developing into what I call a complex reversal rather than a simple reversal. A simple reversal is one candle, okay? This is a simple reversal. It's one candle back here, right? Simple bullish reversal. A more complex bullish reversal is a higher low. Okay, so it's a series of candles together, right? I have that trying to do that here, right? I have this attempt to go higher. It tried to go lower, failed so far, right? It's rejected this the high 26s, low 27s. It's rejected, and it should reject that because look where it is, right? We're still in the midst of a consolidation zone. It should reject that. So in these consolidations, you have to understand. I mean, I'm saying it should. The market does whatever it wants to do, but there's a higher probability that it rejects. And the reason is you have order flow in this area, okay? Recent order flow. You have a lot of people that are short, and these shorts are looking to get out and for break even or profitable after taking a bunch of pain, right? Those shorts become buyers. So that's why you're likely to see buying attempts over here because there's likely order flow covering on top of new buyers jumping in, okay? But when that becomes more of a buyer type of thing, when the order flow becomes highly buying, right, where it becomes imbalanced to the bullish side, that's when you see the next move higher, right? That's when you see the big green candle, which we don't have yet. So what I want to see, we're starting to see what I want to see, right? We have the failed low, basically double bottom variation, but I need to see the confirmation candle. We don't have a candle. I'm waiting for the candle now. So now I need to see an inside bar. I need to see a bullish engulfing candle. I need to see something like that. a pin bar would be nice, something like this. I'm going to draw it. Okay, we can see a variation of things here, but I would like to see something like this, right? Like a little pin bar, something like that, or a bullish engulfing, like I said, or an inside bar. Those would prompt me to go long and to call a long, which the robot will not call because the robot is not programmed to see that. That's something that requires more context than what the robot can see. Okay, does that make sense? So that's my plan for the long. I'm very interested in longs here. I'm just waiting for the confirmation. My students should be really on top of that. Okay, you guys cool? All right, so if you have any questions about that, let me know. Let's now move on to the ATR conversation. You guys want the ATR conversation? So for you who are not familiar, in fact, let me just run back. Let me see if I have any questions about Bitcoin. Okay, Chris from Milan. All right. Buongiorno. That's the only thing I could say in Italian besides some bad words. Okay, you have to focus harder on more hand waving. Thanks, Kai. Yeah, I need a magician hat. I need a wizard hat. Okay, TradingView has to send me a wizard hat. Outside bar BTC with mini double bottom. Okay, Alex. Okay, outside bar. Okay, so I'm glad you mentioned that. This is not in the way I interpret that does not qualify as an outside bar. Although the range is outside the previous bar, an outside bar is what I consider a bullish engulfing candle. So the outside bar should look like this, not a doji. That's a doji type of, or a spinning top, whatever you want to call that, right? Where you have the long tails on both sides. I want to see a solid green candle is an outside bar. Okay, it has to be green, obviously, if we're going to be bullish. If we see an outside red bar, don't go near that thing. But an outside green candle, right? Outside bar. Let's see if I can find any examples of that, of an outside bar. It has to take out the range of the previous. I don't really see any recent ones here on this time frame. Anyway, it has to take out the range of the previous candle. Okay. See, this is almost an outside bar, almost, but it never went out. It never went the top of the previous candle, right? It should have taken out the high of the previous candle. Never took it out, but that's almost an outside bar. Does that make sense? This is a doji. It's not an outside bar. So I hope that gives you some clarification. All right. So so you guys, I see some of the questions in here. I'm going to jump back and read those questions. All right. So thanks for asking. Same with the TradingView people. Okay. What channel is that? Would you share the link? By the way, thanks for. Okay, no problem. No, the channel, if you're talking about the scanner, that's in Discord. You have to be on there. Okay, and there's two of them. There's stocks and there's coins. Now, let's talk about ATR. So for those of you that are not familiar with it, it means average true range. You can Google it. There's plenty of information on the formula. Now, it's not an oscillator. Okay, so let me ask you guys a quick question. Let me see who's paying attention here. Here's the interactive portion of the stream. Let me guys ask you something. Let me ask you a question about the oscillator. About the ATR. So as we can see, this ATR on the bottom, this graph on the bottom here, right? There's all this information back here. Can anyone tell me, and if you don't know, just say I don't know, but can anyone tell me how this information may be useful? Can anyone tell me? Can anyone tell me? It was an outside bar an hour ago. Oh, okay. Oh, okay, no problem, Alex. Right, Coinbase may have drawn a candle, a variation because of the closing time. This is an 8-cap chart. Now, I noticed the candles aren't exactly the same. Okay, but it doesn't matter really. But okay. Anyway, thanks for mentioning. Can anyone tell me, as far as this ATR goes, can anyone tell me, like this area that I'm drawing here, this rectangle? Can anyone tell me? How is that information useful? Can anyone tell me? And if you say, I don't know, that's acceptable. You can say, I don't know. Anyone? It's useful to understand where to place a stop loss, Alex asks. ATR can be used for stop loss and take profit. Okay, but here's my question. My question is this area that I'm drawing on this rectangle. No idea, Peter says. How is this historical ATR useful? Okay, see, I'm asking you guys a trick question. It's not useful. It's completely useless. When we look back, it doesn't mean anything, right? All the ATR, all we can see here is a history of what the ATR was at the time. All we're interested in when it comes to the ATR is the actual number now, okay? The actual number right now on Bitcoin on a daily chart is 977, as we can see. That is all we need this thing for, okay? I mean, if I was able to calculate this thing without being on my chart, I would, because we don't need any of this previous information. Is that clear? So again, people like to make things more complicated. Like, oh, yeah, there must be something more to that. No, there's nothing. It's completely useless information. We're only interested in the ATR at the time of the trade. That is all we are interested in. Make sure that's clear. Now, another thing I want to mention is each time frame is going to have its own ATR, because look, this ATR is set to 14. So basically what it's doing, it's going back 14 bars and it's doing a calculation and coming up with the average true range over 14 bars. As the bars advance, that number is going to change. And then we see a history of ATR changing, okay? But for our trade, it means nothing, because especially our short-term oriented trade, which is really what this is for, you know, we're only looking at a trade for a day or two or three, or maybe you're looking at a day trade, which is obviously only for the day. So the ATR is not going to change much in that period, okay? So we're only interested in the ATR now. So let's go to the 4-hour chart, because that's really where the trades are happening, okay, for the trade scanner anyway. And we're interested in the ATR of that. So what is that? Now, notice the number is 410 on the ATR, if you can see that here. I don't know if you guys can see that number, but it's over here, 410 at the current candle, okay? The daily chart showed 977. So which one do you use? You use the one on the time frame you're working on, okay? Of course, larger time frames are going to give you wider ranges. So it's very important to stick to the time frame. If you want to use an hourly chart, which is acceptable on the trade scanner, the ATR is 229. So this is a very important number, and you have to determine which one you're going to use. We're going to use the 4-hour, because that's really where I suggest, if you're going to take a trade scanner trade, that's where I suggest you use, that's what you use, okay, to come up with your levels and all that. Does that make sense? So, so let's talk about now let's talk about this in real time with a real trade scanner idea. So I asked Raman here to put some trades in the channel. Okay, so on 421, today's 424, right? So on 421, the scanner called Bitcoin at 28,328. Obviously, that's a losing trade. So let's take a look at that here on the chart. Like I said, the trade scanner is not perfect. And, you know, I'm tying in both the trade scanner and how to use the ATR as a way to come up with routine orders. Let's see, where is that 28,328? It's somewhere up here somewhere, right? What's the high in this candle here? So it's right here. This is 28,328, right in there, right? That's where the scanner called. Let's make that nice and big so you can see. All right, and I'll erase this little box here right now so we can make this a little easier for us, right? So right there, that candle is where it called along, that candle. So at the time, what was the ATR? 420 at the time, okay? Great if you're into smoking, but I don't smoke. So anyway, 420. So what do you do with that? Well, first of all, as I was pointing out with that Ethereum trade before, you want to take, since we're working with a smaller time frame here, 4 hours smaller compared to a daily chart, since we're working with a smaller time frame, using 420 points is kind of tight. First of all, that would have been stopped out. Let's see, where is 420 points? From 28,131, that's going to be like somewhere around this area, something like that, right? That's where the stop would have been. Now, here's a tip. When you look at the ATR, right, the ATR at the time, which I said was 420, you have to round that number, okay? Don't use the exact number. So if you're like at 401, 402, you round it to the nearest whole number, 400. This thing is at 420. So it's okay if you want to round it to 500. That's okay. You should use a whole number for the ATR, not like, you know, a 421 or 425. Don't do that. Use the whole number, 400 or 500. Does that make sense? So if we used now that number that the ATR gave us there, so the scanner has done the hard work for us, right? The scanner has told us look for longs, so the scanner has taken care of the strategy. The ATR has nothing to do with strategy and everything to do with your order placement routine. Order placement routine does not give you any type of special advantage. It does not give you any type of inefficiency to exploit. It is simply a routine to help you place orders in the same way every time and avoid mistakes, minimize mistakes, right? And also minimize yourself from the equation. So again, we're going to say 500, all right? So the low of this candle, if you're taking the high of the candle, 28,341, so let's say you're getting in at 28,350, okay? You're buying this thing at 28,350, and you're going to use a 500-point stop. Now, 500 points, again, like I was saying, is kind of tight on this time frame, right? So the stop, again, would have been 500 points lower. Now, if you multiply the ATR times 2, it's going to be 1,000 points, right? Which is very close to the daily one. You see where I'm going with this? So now let's put that stop on here. So the high of the candle, because we have to project this from the entry or the high of the candle. So we'll say 28,350. So we'll say 27,350, right? Would be a 2 ATR. This thing went to the stop, right? Let's see, where's 27,350 on here? It's right around here, okay? So it would have went to the stop in that case. But the thing is, at the time of the entry, you had your stop figured out, which it went straight there, okay? Or like I said, so that's ATR times 2, which is generally what I would recommend on a 4-hour chart, especially if you're dealing on anything smaller than that, smaller time frames. You should be using ATR times 2. All right, ATR times 1, again, it's like around here somewhere. Again, would have been stopped out just for less, but let's assume we're going to use ATR times 2. Now, once you have this, ATR, this is ATR times 2. Are you guys following me so far? Let me know if you're confused. This can get confusing. That's ATR times 2. If you have a trade on that you're looking at risk, notice I'm focusing on risk here. Said nothing about reward. This trade would have stopped out. So it's good we're looking at a losing trade, but nothing about reward. How do we calculate our reward? Can anyone tell me? Probably Alex knows, or maybe some of my students know. How can we calculate reward from this? So we've determined that we're going to use ATR times 2, which is 1,000-point stop. Okay, ATR times 2. What should I do to calculate a take profit? Now, this is again before I take the trade. Can anyone tell me? Okay. Can anyone tell me? Can anyone tell me? You could say I don't know too. That's acceptable. I don't expect you guys to know this stuff. This stuff can get a little complicated. Okay. Nasir says should be 1. Okay, no. Not 1-to-1. Okay, 1-to-1 is acceptable in certain situations, but you should not start out at 1-to-1. Alex says 1.5-to-1. Yes. So Levant says ATR times 2.5. Now, so Kai says at least 1-to-1, better 1.5-to-1. So, okay, Raman says 3.5. This is what you do. Okay, I'm going to give you the answer here. So we've calculated 1,000 points, right? ATR times 2 is 1,000 points. How do we get to a 1.5-to-1 ratio? We multiply ATR times 3, right? So if we have ATR time, not 3.5, but 3, we will get basically, if we're risking 1,000 points, we should be looking at a what? 1,500 point, or 3 times 500, 1,500 point profit target. Okay. So, I mean, let's just put that on here. Although this went straight to the stop, right? After a few hours, after like, half a day over here, let's look at where would 1,500 points be? So 28,367. So it'd be like 29, let's see, 29.8, something like that. This is where the take profit would go. Okay. Using the ATR. This is where the take profit would go from that trade. Now, the whole strength of all this, you're looking at a losing trade. You're like, well, what good is it? It's a losing trade. The ATR doesn't help you with the probability of the trade. The ATR helps you determine a risk and reward without having to fumble around with charts and figure out, well, where should I get out of this thing, and all that stuff, without having to do chart analysis. It gives you a routine process. So ATR times 2 gives me my risk. And then that number, I can multiply that number times 1.5, or I can just say ATR times 3. Okay, so I risk 1,000 to make 1,500 in this case, and I'm getting this number all derived from the ATR, right? So 500 points, 1,000 point stop loss, 1,500 point take profit, 1.5 to 1 reward risk. As long as you're starting off with that, that's acceptable. Does that make sense to you guys? Now, some people mention 1-to-1 and all that kind of stuff. There, 1-to-1, here's the way I like to treat 1-to-1. If you're in a very aggressive trade and you have low expectations, okay, 1-to-1. Or if you're in a trade that's green and it's fooling around 1-to-1 and it's giving you a hard time, get out, take the money 1-to-1. But you should at least make the effort to give the market a chance to reach 1.5-to-1. Okay. And if you're in if you're in a situation like right now, okay, Bitcoin, let me erase this and let me talk about another example here. Now, are you guys clear on what I talked about so far? Or have I confused everyone? Let me know. If you're confused, put it in the channel. I'm confused. Because the goal here is I don't want to confuse you. I'm trying to provide clarity. I'm trying to provide some really valuable, helpful information that you could use to improve your performance and minimize mistakes. I'm not giving you a strategy that's going to give you some type of statistical advantage. I'm not doing that. Okay, that's not what this is. This is to help give you a routine so that you can minimize your thought process. Less is more in this game. I'm giving you a routine so that you can minimize yourself from the equation and basically use market information to determine orders in advance. This improves your order placement game. Does that make sense? I just want to be clear. Okay. Okay, cool. So Nasir says all clear. Needs to be more than 2 times ATR. Well, it depends, but 2 times, in this case, it needs to be 2 times, but we can sit here after the fact and say, well, 2.5. If I came out and said, we should be 2.5 times ATR, you'd still be in this trade. And I could say, see, it works. But there needs to be a standard somewhere. There needs to be a standard, right? So for smaller time frames, you're looking at least 2 ATR. Whatever multiple you use, if you want to use more than 2, that's up to you. But there needs to be a standard. And I think 2 is acceptable. Now, if you go to a smaller time frame, like a 1-minute chart or a 5-minute chart, you probably have to use like a 3 ATR, possibly, or a 4 ATR, okay, for such a small time frame, because the market's more variant, I guess you can say, on a smaller time frame. It moves around a lot more. So let's say the standard is 2. Multiply times 2 for your risk, multiply times 3 for your profit target. That gives you your orders before you even get into the market. You should know where your stop goes. You should know where your take profit goes after you do the calculation. And it's all going to stem from your entry price. Okay, you're going to subtract from the entry price for your stop. You're going to add to your entry price for your profit target. Does that make sense? Right? That's what we're looking at here. Now, this is a formulaic way, a routine way where you don't have to think. If you want to be more complicated and you want to use more context, that's when you can start using price structure. And that's what I teach my students, right? We look at price patterns, we're looking at levels, and things could be more sophisticated, but you're using your judgment, right? You're not going to be able to do that the same way like the ATR. So the ATR is sort of like a shortcut. Sometimes they'll overlap each other, okay? Which one is better? In my opinion, the better one to use is obviously physical structure, physical levels, okay? Because physical levels, like I'm highlighting here on the chart, are places where order flow has transpired, okay? The ATR is just a formula, and it may not call a level where order flow has transpired recently. Does that make sense? So I'm giving you this routine because it can be helpful. In fact, I'm going to use ATR to judge the trade scanner trades because I have Alice helping me put together like a trade history, and someone else volunteered to help me put together more of like an automated thing. And we're going to use the ATR to judge the performance of this thing. Okay. Because instead of sitting there trying to draw lines, and be like, okay, I would have put the stop here and I would have put the thing here, right? Yeah, we could say whatever we want after the fact. But the ATR can help standardize everything. The ATR can help us come up with a way to say, okay, well, based on this, if we use this formula, this is how it would have turned out. Okay. And you can use that routine going forward, right? You have your strategy. You've determined with your strategy if you want to go long or short, and now you want to figure out your order placement. Okay. Now, the first thing people usually ask me is, well, where do I put the take profit? How do I know how far it's going to go? You don't know. Markets are random. Okay. So that's why you can do that. I tell people right off the bat, you should be at 1.5 to 1 reward risk. Right from the start is where that's where you should be. Okay. So that's my ATR example. And like I said, it's all going to stem from their time frame, right? The 4 hour is not going to be the same as a daily. The daily chart, you may not have to use 2 times ATR, maybe 1 ATR, which was 977. You round that to 1,000. Okay. Maybe that's acceptable for that time frame. You can double check that by checking price structure, right? Let's just do that real quick. And then I'm going to get to your questions, right? So let's say, here's our daily chart. And, let's say we're using the ATR of 1,000, which is what it's telling us. I mean, 1,000 points from here, right? My current price, if I was entering at, the closing price right now is 27,336, right? So 26,3, whatever. That's going to put me like right here, something like that. It's going to put me like right there. Okay, in that area. That's pretty reasonable on a daily chart. That's not too bad. Okay, I mean, structurally, look what it lines up with. Okay, that's not too bad. So it's going to depend on the time frame. The smaller the time frames, you should be considering higher multiples. Does that part make sense? Okay, the larger the time frame, most likely you can use multiply by 1. Just use the ATR, and then for your take profit, ATR times 1.5. All right. So again, I just want to make sure we're clear. If you found any of this confusing, please join my Discord chat community. Send me a message on there. Okay. And I can try to explain a little further. But I think it's an important concept that can really help you guys manage your risk better. And that should be your primary goal, to protect yourself, not to make money. Right. The first question I always get from a beginner: how do I make money? How do I know where to put my take profit? Right? No one asks me, how do I maximize my probability of getting out green? That's the real question that you should be asking me. Not where do I put my top, how do I project my price take profit to get the most out of it, right? That's what everyone asks me. But of course, that's greed talking. You need to get out of that mindset, and you should be thinking probability. I'm more concerned with getting out green with a higher probability or a higher frequency than I am about how much I get. Because I want to be green all the time. I don't care how much it is. I just want to be able to come out green. Okay. And you could do that enough times. That's better than trying to go for home runs. Okay. Because markets are all over the place, especially in harder environments like this one. Okay. That's the real mindset. If you really want to be in this game seriously, that's the mindset you have to adapt. Okay. So that's my ATR session. I hope you enjoyed that. Now, okay, cool. Well, Alex, you got it. Okay. In fact, this whole thing was inspired by your comment like a week ago. So you pretty much got this. Okay. And he's not even in my he doesn't even get these scanner things. All right. He's just pretty advanced. Anyway, and nice short, by the way, that you took on Bitcoin. All right. So let me get to, I know I've spent a lot of time on this, but I think it was an important topic. Let's get into some of your questions now. All right. I know I've been slow on these questions. I know I'm running a little behind. So thank you guys for your patience, and I hope you found value. If you like what I talked about, again, please press the like button. Please press the boost button. Please subscribe to the channel so that it helps support me and I can create content like this. It makes it worth my time. Okay, cool. Thanks for that. All right, let me jump over to start. Let me start answering some questions now. All right, I'm just going back to some of these things here. Okay, Matic. Alp wants to see Matic. All right, now Matic is interesting because Matic. Let me just move this over. The scanner, I know I bring up the scanner a lot, but I'm very fascinated with the scanner since I built it. It's been calling. How many of you guys can confirm this? It's been calling Matic short. Wow. Matic is right now at 99.28. How many times has my scanner called Matic short from 112? How many times? Raman, you want to tell me? All right. So it was right. Okay, it's been calling while Bitcoin was going higher. It's been calling Matic short, and I warned people. I said, be careful, because if Bitcoin is really strong, you don't want to be shorting something against Bitcoin, right? Anyway, this short would have worked out at from 112. We're at 99.25 right now. Okay, where was 112? Let me just put that. Let me just put that on the chart. 112, 122, 116. Let's see. Where is 112? Probably called it from bad prices. Let's see. Here's 112. So here, that's where it was calling it short, right around there. I mean, I remember some orders from there. I don't short these things, but that's where it called it. Okay, so that may have gotten stopped out, but eventually it was the right way to go. I don't know if it called it short again. It may have. I don't know. Okay, I haven't checked. But anyway, so Matic. Let's talk about Matic. First of all, this thing has been relatively weak all along. All right, you have a resistance right here at, what is this, 123, and look at this consolidation. Okay, you couldn't even break that resistance. Bitcoin has turned, and this thing, which was acting relatively weak all along, which we had plenty of warning signs. Look, it goes straight to its low. Okay, you see this? That is not good. Okay, that's certainly not a sign of strength. Okay, I don't think we need the ATR on this chart anymore, because we're not going to talk about specific orders. So I'm going to remove the ATR. Okay, I'm going to remove this thing, because that was the ATR lesson. All right, now, so here's the thing. This thing is sitting on a support. This is a lower high. While this is an interesting area for a potential long, if you want to look at it in terms of this structure right here and say, well, it's a higher low consolidation, possibly. But I'll tell you, I'm not a big fan. Okay, especially since it's been acting relatively weak to Bitcoin, and I had plenty of warning signs on this thing. So, for one, like if you're looking to buy it, it's highly risky. Okay, there's no signal to go along right now. Sort of like that Bitcoin situation, but it is at a better level if you're thinking about a swing trade, right? We're not at a resistance. We are at a support, but chances are it's going to break. Okay, especially if Bitcoin probes lower. This thing has been relatively weak, so I wouldn't expect much from this on the long side. If you take this thing long, I mean, you should be targeting this area here, maybe something like that, because you're not looking at much more than that if this thing can't clear this resistance up at 122, 123. So you're in a better area for a potential idea, but like I said, you're better off playing with Ethereum or Bitcoin if you're looking for a swing trade long. As far as position trades, I wouldn't go near any of these things. I don't trust any of these altcoins. They're just, especially in this environment, especially with bonds, the way they've been behaving. Let's take a look at the bond market real quick. All right, we haven't gotten a chance to talk about like broader markets. I mean, this is the bond market. Okay, real quick, you should pay attention whether you trade altcoins, stocks, Bitcoin, whatever. You should always pay attention to this thing. And look, the bond market is still range bound. Okay, this is the bond prices, and we're not making any progress. Rates are not particularly going lower or higher. They're just range bound. All right, and the market is sort of getting insensitive to this. So the bonds need to do something. If the bonds break out, then I would be more interested in sustainable rallies. If the bonds break lower, look out. I would not be interested in any sustainable rallies. Right now, this thing has to decide, and it's not really telling us anything useful here. There's really nothing to judge here, okay? It's got to break one or the other. Does that make sense? So that goes back to like something like a Matic or any altcoin, for example, okay? So I hope that answers your question. Let me move along. I know I have a lot of questions. I'm going to jump over to TradingView here. Let me see what you guys are asking me over here. Okay. Okay, cool. I watched. Okay. Now I know. Okay. Please check. Okay, so that was Matic. Nice. Well, and yeah. Okay, cool, Suzanne. All right. Okay, just going back here. All right. I'm watching. All right, cool. Works. Okay. What do you think about Link? Okay. So again, another altcoin. Let's take a look. All right. Link USDT. So it's probably going to be similar stories across the board. This is interesting. So let's go to a weekly chart first on Link and just see the bigger picture, right? What's going on? First of all these altcoins, this is not an opportune time for them. okay? Just based on that bond market situation. If you think that altcoins are going to come back and like, oh, they're at good prices right now, think again. We need easy money. We need cheap money. Right now, we still have a Federal Reserve that's only interested in raising rates. I haven't seen any rate cuts yet, right? We have inflationary problems. We have all kinds of problems, right? Not exactly an environment for these things. We need a speculative environment. And we're moving further and further away from that, okay? Until, of course, they change rates and rates start going the other way. I don't see it. Until I see that, I have no faith in these things because these are highly speculative assets. I've talked about that many times. So again, look, you're stuck at a resistance. This is a weekly chart, okay? You're respecting this resistance at $7.26. You could round that to $7.50 if you want. And look, this is an outside bar on the weekly, okay? Outside bar. You have the high, what, 879 is the high on the outside bar? 879. The low of the outside bar is $6.86. That outside bar is the previous week's candle. You have an outside bar rejecting the resistance. Stay away from this thing. That's a weekly chart, which implies lower prices, at least in the near future, at least over the next week or so. That's what you're looking at here. So people that are looking at these pullbacks and are like, oh, yeah, it's time to buy. I would not be excited about these things, okay? You want to look for better levels? Look for real support levels like this. Right? This is a more relevant support level, $5.41. You can round that to $5.50 if you want. Okay, that's a more relevant level. Generally, this thing is just in a range, right? So you want to look at the range lows, not the range middle, which is exactly where you are right now. Does that make sense? So avoid longs. If you're more aggressive and you're going to try to go for a swing trade, okay, but I think it's low probability just based on these levels. And there's no trend here, okay? So you want to see that range low if you're going to go for a long. All right, good question. Now you asked for two, but I'm gonna do one because I can't stay here for like hours, so I have to do one at a time. So ask me next week if you want to stop by. Okay, cool. I'm walking through the entire trade idea. Okay. Okay, answered that. All right. Okay. Gold. So let's take a look at gold. Gold has been interesting. So, gold has been obviously reacting to the dollar. Here's gold. In fact, whenever you look at gold, you should look at the dollar index. Okay, so let's just take a look at the dollar index first, real quick. You should look at the dollar index. You should look at the bond market. You should look at these things every time. Okay, the S&P, and compare them to each other. This is the dollar, the U.S. dollar. Now, the dollar has been nothing but very, very problematic. Okay, it's been in this bearish structure here, but the structure, that's a bearish structure, but I'm not calling that a trend exactly because we may be in a double bottom situation, right? Double bottom situation in a broader bullish trend. Got to be careful with this, right? So this possibly a long on the dollar is just no confirmation. If that's the case, then everything against the dollar is going to turn the other way. So while the dollar looks like garbage right now, and we have to be careful, the dollar is obviously very sensitive to a lot of things. And I hear all this talk about, you have all these other countries that are getting away from the dollar. They're really trying to unhinge the dollar as the world reserve currency. And something about, they're not going to be able to pay back their debt. And I don't know. I don't pay too much attention to the nonsense that I see on YouTube. But the point is this: if the dollar breaks that support, that's going to be bad for the dollar. Okay, bearish for the dollar. But I would not get very optimistic about that until it proves itself, because it's in a location where there's a higher probability that it reverses. Now, why is all this important to gold? Let's take a look. Because gold is inverse to this thing, okay? And gold is basically a hedge against, a very weak dollar or inflation. So when it comes to gold, look at the weekly chart. Look where we are on the weekly chart. I pointed this out to Peter and I pointed this out to Sean a few weeks ago too. This is not a great place to be long. Now, when you look at short-term movements, gold keeps holding 2,000. Gold is strong. Gold is strong. Yeah, gold is strong, right, based on this. But when we look back, gold is just at a range high, okay? And there's been some evidence of rejection here. Someone is selling gold, okay? So it's a tough spot. If you're going to go long gold, You want to go long small? Okay. And maybe you're anticipating a breakout. We can see a breakout in gold. If the dollar sells off, you can see that breakout. Okay. And that would be a pretty powerful breakout considering that. I mean, look how far back this range goes back years, right? So if it breaks out, okay, you have something, but I would not go nuts taking risk here. These are high risk levels for longs when you look at this from a technical standpoint. I know fundamentally we can argue this and we can argue that, but please keep that in mind, okay? That's where you're buying if you're thinking about buying. If anything, aggressive shorts would make a little more sense here, right? Looking to cover back at like the midpoint of the range. Something like that would make a little more sense just in terms of a range bound market. Okay, doesn't mean it will work. I'm just saying probability wise, right? Otherwise, for longs, really, you should be looking at old support levels, which go all the way back to here. We're nowhere near that. Okay, so for longs right now, be very short-term oriented. Take money off the table. If you have money on the long side, you have profit. Don't be afraid to take money off the table. I wouldn't be overly optimistic about a breakout, although it can happen. Right? It's impossible to forecast if it will happen or not. You just have to look at it from the perspective of probability and risk. How much risk you want to take versus what you think the probability is, it's going to do what you think, right? We are in a low probability area for gold longs. That's all I can say, all right? A better area obviously would be support levels if you're thinking long. Does that make sense? So that's gold. Okay, all right, so that's all right. So these guys answering my ATR questions. Okay, cool. All right, Nasir Gal. All right, hold on, Nasir. Let me jump over to YouTube over here. Okay. Oh, Gray, how are you from Shanghai? Cool. All right. Cool. Thanks for stopping by. All right, Johan from South Africa. Okay, hold on. Let me see. All right, I'm gonna have to wrap this up here in a moment. Let me see. Look, I'm gonna have to skip a bunch of questions. I apologize. All right, if you guys have questions for me and I missed your question, I apologize. Just come back next week and ask me again. If it's an altcoin question, chances are it's going to be very similar to some of the altcoins that I've talked about. All right, I'm just going back here, looking at the chat. That's how to keep our account viable. Right. Okay, cool. Thanks, Alex. Okay, I understand. We'll practice this. Okay. All right. Raman. All right, so look, Raman says here, hey, Adrian, how are you? Okay, you got Dom. All right, cool. I heard we are going to see. Yes, that's right. All right, I'm just going back, man. I'm just catching up here, man. Okay, during bull markets, should we raise the two? Well, okay, Alex, about the ATR. If you're on the side of the trend, it's okay. It's reasonable to expect more. So if you want to expect more and go to 2-to-1 or something like that on the side of the trend, that is within reason because you're expecting more on the side of the trend. Counter trend, you should probably be less, right? Or more aggressive trades. So you can adjust that way. There's a lot of ways to adjust. I just basically showed you guys a basic routine, okay, that you guys can start practicing. Okay, Algo, USD. All right, I'm not going to be able to answer all these. All right, let me just run through the chat. Yeah, thank you, Matic. All right, so on the 11th, well, that was quite some time ago, called Matic short. LTC having a halving really soon. Okay, Litecoin, Matic on 329. It called Matic short quite a few times. All right, I'm just catching up. Link has been in 1 year long range. Great trade tops and bottoms. Okay, Link, that was Link USD. I think I covered that one. Okay. Wow, I sold some Link at $30 ages ago when I sold my other altcoins. Can't believe where it is now. Yeah. Okay, covered gold. Okay, you guys. All right, so so let me do this real quick. I got Matic. All right. So I'm gonna let me just jump around here. I'll pick one more, and then then we'll wrap this up. All right. So let me see what I got. I went over Link. Guys got Algo. Okay, Gal. So let's do Gal. All right, from TradingView over here. So GAL USDT. Again, if I missed your question, I apologize. Okay, so this is another altcoin. Interesting pullback, similar to Bitcoin, right? The first thing that you should do with these things, and again, like I do with my students, right? By the way, students, student meeting this week. I haven't set up the date yet, but look for it probably on Wednesday or something. Otherwise, I'm gonna have to do it like the 1st of next month, something like early next week. But student meeting for students. All right, guys. So make sure you look out for the invite. All right. So step one, obviously you're looking for a trend, right, of some kind. Let's go to the weekly chart. And this trend is not exactly bullish. All right, so we have identified that pretty easily. Step two, you're looking for levels. We can do that right from the weekly chart. I don't have to go to a smaller time frame. Look at this, resistance. So we have bearish chart, we have resistance, rejection off of a general resistant area. Not good for longs. Okay, so that tells us that story right there. If you're interested in longs, you should wait for supports. But the thing is, the trend doesn't support the idea of a support being able to hold. Chances are the support will break if this trend stays intact. Your next support is $1.30. Okay, this thing right now is fooling around at $1.67. So if that breaks, then you're looking at this low of 123. I mean, that's the range low, and that's a decent likelihood. It's within reason because this trend is not bullish. You can say, well, yes, it is. Look at this move. All right, that's a temporary move, but you haven't cleared any major resistance levels, right? It tried with the higher low, but there's no higher high. So we can still argue that this trend is generally bearish. And Bitcoin, Bitcoin, you have to look at Bitcoin as your leader. Bitcoin has tried. Bitcoin is starting to have problems now. Okay, so you should always go back to the index or the parent, something like Bitcoin. I mean, this is Bitcoin on the bigger picture. Okay, and while the short-term trend, we can argue there's some bullish momentum there, Bitcoin has not cleared any major resistance levels. Okay, maybe a clearance is coming soon. Maybe if it could produce the higher high, but we don't have that. Okay, this is the weekly chart. We don't have that yet. So you can't sit there and go in with like full-blown optimism. Other factors you have to consider when it comes to altcoins, again, like the bond market. Bond market is not exactly supporting a sustainable rally. Not yet. Okay, I need to see it like bond market really break out of that resistance before we're going to consider that sustainable. So that's why you have to focus more on the risk. Hey, thank you, Nasir. Thank you for the coins. It's very nice of you. Appreciate that. Okay, so again, get your perspective from the bigger picture. If the general trend is bearish, don't expect anything good or anything bullish until resistance levels are cleared. And in order for resistance levels to be cleared, we need cheaper money and we need Bitcoin to agree with the whole thing generally. Okay, so Bitcoin needs to make that higher high. If Bitcoin flounders here and fails and Bitcoin runs up back to 29, everyone's going to get excited, blah, blah, blah. And then it turns and we have like a lower high. You have your answer. Okay. Now, it doesn't mean that Bitcoin's going to go straight into a bearish trend. Not necessarily. Bitcoin may consolidate for a while, but and until things change. Keep in mind, things change, right? And these things are reacting to perceptions of the future. So some new information may come out. The Fed may do something unexpected, like cut rates, which will change things. Charts can't tell us about that. All we can do with charts is basically get a sense of risk for the near future and then project that risk out for a potential reward, right? And then there's going to be a probability involved. That's the best we can do. There's no such thing as high degree forecast, or this guy calls it right all the time. It's all nonsense. So please don't get me started on that rant. All right, so you guys clear on that? Okay, alts are all the same at this time. Well, generally, right? Generally, they're going to move together. You have some variations here and there. Some of them have fake news coming out. You know how that goes, right? But generally, Bitcoin is your leader. Use Bitcoin as your guide. That's one of the reasons why I focus on Bitcoin all the time with my analysis. I treat it like the S&P, right? Wherever the S&P goes, generally your stock is going to go. Not all the time. Not all stocks are highly correlated to the S&P, but many of them are. Okay, so you can use the S&P as sort of a gauge to help you determine, decisions in your stock. Same with Bitcoin and the altcoins, right? That's how I treat that. And altcoins, they're usually, if you're going to deal with them, it's usually better for swing trades or investing. Rather, you're not going to day trade altcoins unless it's like Ethereum or something, right? A highly active altcoin. Most of these altcoins are complete garbage anyway. And if you're going to do anything with them, it should be longer term, longer time frame, larger time horizon. Does that make sense to you guys? Okay, so anyway, all right, again, thank you, Nasir. It was very nice of you. Okay, so you guys, thank you for watching. Again, if I missed your question, I apologize. Please, reach out to me, ask me again. Check the links in the description. You could join my Discord community. There's a free area there. There's a lot of great information, academic information. That's the place you should start. People always ask me, where should I start? Okay, right away they want chart analysis, but really you should get more of an academic foundation, and that's things like the efficient markets hypothesis. You really should spend time learning what that is, because that will help you immensely as you go forward. All right, especially when someone throws a gimmick at you and says, oh, look at this 90% win rate system, right? If you understand efficient markets, you will understand that no one would sell you a 90% win rate system. Okay, because if they actually had one, for one, they would keep it for themselves. And for two, if they shared that with anyone, then any advantage that it was taking advantage of would no longer be available, because everyone would be taking advantage of it, right? So that's why you cannot share a true inefficiency. So all these guys that are sharing all these 90% win rate strategies, you have to wonder, efficient markets will clear that up for you. Okay, you guys. So again, thank you all for your time here today. I hope you got some value out of my stream. Please press the like button. Please press the subscribe button if you found this to be helpful. And again, you know where to find me if you have any questions. So thank you. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.